All right, excellent. Welcome, everybody. Thanks for sitting in with us on this beautiful evening. Tonight, we are going to learn how reverse mortgages work. We haven't done a webinar on this before, so we're excited to have a new webinar for y'all. Tonight's class will be recorded, so don't worry if you miss things or if you want to go back and rewatch things. You will be receiving an email after this, and in that email, we'll have a link to the recording. My name is Carla, by the way. I am the sustainability and preservation specialist at Chicago Bungalow Association. And I will also be looking out for Q&A questions from you guys. There's a little box at the bottom of your screen that says Q&A. If you have any questions while Brenda is speaking this evening, feel free to drop them into the Q&A box. And after she's finished, we will take all those questions and get through as much as we possibly can by 7 p.m. Also, if we don't get through all of them, we can follow up with you in that email, and Brenda has kindly offered to respond to those questions at a later time. In terms of anything else going on with the Bungalow Association, we sent out an email today that's kind of important email for y'all. It's about the Green Homes Chicago program that just launched recently, and applications close on Friday. So if you're not on our mailing list or you didn't get it for some reason, if it kicked to your spam or whatever, feel free to call us at the office and get on our mailing list. We can send that out to you right away. Our office number is 312-675-0300. If you hit 0 or 10, you'll get Kathy, and Kathy can put you on our list for that, no problem. Other than that, again, make sure you put any questions you might have in the Q&A box at the bottom. And I think we can get ready and launch into the actual webinar now. So tonight we will learn how reverse mortgages work, including the pros and cons. There's a lot of confusion as to how they work and the impact they have on heirs. Also, reverse mortgages can be a useful tool to help homeowners 62 and above tap into their home's equity. To teach us all about this is the wonderful Brenda Grauer, who we met very fortuitously recently at a housing expo, who has 30 plus years of nonprofit housing experience. She's going to do some more webinars for us in the future as well, so we're really excited. She is the manager for community engagement with CARPLS, the Coordinated Advice and Referral. Sorry, Mr. Nancy's here. Referral program for legal services. She's also been a HUD certified reverse mortgage counselor, a real estate attorney, a HUD certified housing counselor, and the former senior policy advisor for the Illinois Attorney General Mortgage Assistance Unit. So without further ado, Brenda, whenever you are ready, we are eager to learn.
Great. Well, thank you so much. I really, really appreciate the opportunity to speak to everybody this evening. And like you said, we met at a housing fair, and I would think I was talking about transfer on death deeds and how they can help people transfer property from generation to generation and make sure that the home isn't lost to, lost to foreclosure or tax sale. So I want to talk a little bit tonight about reverse mortgages, which is a way to help keep people age in place. And there's a lot of commercials, marketing materials that people get. And it's like, well, how do we figure this out? And how do we figure out if it's right for us? So I'm not here tonight to advertise for reverse mortgages. I'm not here to say that they're a terrible thing, but I want to provide information, because when people have information and they have education, then they can make a decision that's appropriate for them. So first of all, they said I work for an organization called CARPLS. CARPLS stands for Coordinated Advice and Referral Program for Legal Services. Say that 10 times fast. And I just want to tell you at the beginning tonight, if anybody can come up with a better name for our organization, anything that would pass the straight face test that I could pass on to my executive director, I personally will give you $100, because when I hear the term CARPLS, I think carpal tunnel syndrome. It doesn't tell me anything about being a legal services program, which we are. In fact, CARPLS was the very first standalone legal aid hotline in the US. We've been around since 1993, so a little over 30 years old. We provide brief legal services for legal advice and consultation. We'll help review documents and do some basic drafting, but we don't actually represent people in court, because what we find is about 80% of the people who have legal problems of some sort don't necessarily need a lawyer. They just need information and how they can do some things themselves. And then if people call our hotline, and we have general hotlines, we have a hotline for veterans and their families, we have hotlines for cannabis expungement, we have all sorts of programs. We have desks at the Daily Center and at the administrative hearings building at 400 Superior, all to help people help resolve their legal issues without direct representation. So this year, CARPLS will be helping over 85,000, we'll be providing over 85 legal consultations this year on our hotline and through our special projects. In terms of me, I have been in the industry for about 30 years, and that's the industry of affordable housing of all sorts, whether it's rental or home ownership. I currently work at CARPLS. I am also a HUD certified reverse mortgage counselor, because as we'll learn, before anybody can get a reverse mortgage, they have to do a counseling session with a HUD certified counselor who's specially trained and has passed examinations and is certified to provide reverse mortgage counseling. And this is to we'll talk later, that it's to provide a safe space to provide non-biased information and to answer questions from somebody who's not trying to sell you something. I'm also a real estate attorney. I worked for Legal Assistance Foundation, which is now called Legal Aid Chicago, for about 9 years, specializing in housing, working with residents of public housing, working with victims of predatory lending. And I also used to work in Lisa Madigan's office during the last foreclosure crisis, which was between 2008 and 2016. I was there from 2007 to 2010. So let's start talking about reverse mortgages. First of all,
Brenda, sorry to interrupt, but I wasn't sure if you wanted your slides up yet, but your slides actually aren't showing yet.
They aren't?
They aren't.
Uh-oh.
It didn't really need them for your intro, but it was.
Oh no, this is
yeah.
this is not good. Let's see, from current slide. Are you seeing it now?
No, I'm not sure if Angela has any.
I'm not sure why. Okay, well, thank you for telling me that. That's sure. I don't know what the issue is, because when I do end show.
We might need to restart the screen share and see if it works the second time.
Okay, let's see. Zoom. Screen share. Okay. Can you see it now?
Yes, we see it now, and we got to hear
okay, so
that's fun. Okay, great.
Okay. We'll do from current slide. Here we go. And just so that you see, there were slides prior to that. I wasn't just kind of like just talking. And this will be in the presentation that is shared on YouTube as well. So, so reverse mortgages, they're a tool to help homeowners age in place, to remain in their homes as long as they want to, as long as possible. And it's designed for older homeowners. So just kind of a little bit of background with reverse mortgages. In general, as a policy matter, about over 80% of older households that are headed by people who are over age 62, they own the home they live in. Now, there might be a mortgage, so somebody else has a piece of it as well, but over 80% of people over age 62 are homeowners. 72% of those homes have no mortgage, which means that people have equity. The estimates are that about $2 trillion nationally is locked up in equity in homes that are owned by people who are over age 62. And according to AARP research, 84% of homeowners who are over 65 years of age and older want to stay in their homes and never move. So reverse mortgages are a tool to help you do that. They're not a solution to retirement. They're not a solution to be able to stay in your home forever and ever, but it's a tool. It's a tool that gives you money, and money can help. There might be other restrictions, in terms of how the home is structured, whether there's a bathroom and bedroom on the main floor, whether it's accessible, whether there are stairs to get up into the home. There are in many bungalows, those stairs might present an issue. There might be lots of reasons why people might not be able to stay in their homes besides having money, but this is one tool to help people. So a little bit of background, home equity conversion mortgages, or HECM, HECM, home equity conversion mortgages. That's just the name of the federal program, the FHA program, and the FHA's reverse mortgage product. So these are FHA loans. HECM is the FHA product for reverse mortgages. When we say reverse mortgage, that's just sort of a general term. Congress authorized HECMs in 1988. Since then, over 1.3 million HECMs, or home equity conversion mortgages, have been originated. They do require counseling before someone gets a reverse mortgage. And a lot of times, as I said, I'm a reverse mortgage counselor, been one for over 20 years. A lot of times when I talk to clients, and I probably do about 500 sessions, counseling sessions a year. Anybody who's doing the math, yes, that's about 10,000 sessions. People are concerned that I really want to find out if they're, if they've kind of got all their marbles, if they know what's going on. And that's not really, that's part of the purpose of the counseling, but really it's an education session. And it's mandated that people, before they get this FHA insured mortgage, this HECM, that they get the counseling, because people take advantage of seniors. I mean, there's scams out there, all sorts of scams, but particularly as they affect seniors. And when you have especially older homeowners, where they might be on fixed income, limited resources, you really want to make sure people know what they're getting into before they make such a large decision to mortgage their home. There are also some major protections in addition to the counseling to help people. One is that before you, at the time you get the counseling, homeowners, as part of the counseling, undergo a financial assessment where the counselor talks with the senior, the homeowner, about their income and their expenses and their credit to make sure that they have enough funds to be able to sustain homeownership, to pay their property taxes, to pay their homeownership, to pay their homeowners insurance. There's also protections for, sometimes you have a situation where it's a married couple and maybe one spouse is over age 62 and the other spouse is not. So what does that mean in terms of a reverse mortgage? What protections does that younger spouse, who ultimately is what we call a non-borrowing spouse, they're not going to be on the mortgage because they're not 62, or there might be other reasons that a spouse might not be on the mortgage. It might be a second or third marriage, and the house has belonged to one spouse for a while, and then there's a new spouse that comes in, and the first spouse doesn't want to put the other spouse on the reverse mortgage. What protections are there? And there are certain protections that are discussed as part of the counseling, but there are some protections necessarily built into the program. The counseling piece, though, I think, being one of the biggest protections. So what is a reverse mortgage? It is a loan against the value of your home. It's a mortgage. Some people say, when I talk with them, they say, oh, I'm borrowing my own money. No, you're not. You're borrowing money from a mortgage company, from a bank, from a finance company. Because if you had your own money, it's not your money you're borrowing, because if you had the money, you wouldn't need to borrow it. So it's a loan. It provides cash advances to the borrower, and interest accrues on that money that people borrow. So if you borrow $1,000 from the loan, then you're charged interest on that $1,000. Okay. However, you don't have to make payments on the money that you borrow. Think of it as getting a student loan. If you have children, grandchildren, yourselves at some point took out a student loan, and while you were in school, you didn't necessarily have to make a payment. Interest accrued on that balance in most cases, but you didn't have to make a payment. Nobody was hounding you for the money. So similarly, think of a reverse mortgage as just a deferred payment. A payment is made at a later date. The payment does not have to be made on the loan until the last surviving borrower sells, moves out of the home, or passes away. The most important thing to remember is that you, as the borrower, still own the home if you get a reverse mortgage. You're not saying that if you sign the papers that when you pass away, you're giving the home to the mortgage company. No, you still own the home. It's just like having any other mortgage on the home. And when you pass away, whoever inherits the home has to figure out how to pay off that loan, which we'll talk about. So, what happens when you get a reverse mortgage or get a HECM? You're borrowing part of the value of your home. So if you have a home that's worth $300,000, you're not going to be able to borrow $300,000. You're only going to be able to borrow a portion, maybe $120,000. It'll depend on a few factors, which we'll talk about, but you're borrowing part of the value of your home. The lender, whoever you borrow the money from, then adds interest and fees to the amount that you borrow. And the interest compounds. It's interest on top of interest. And that interest uses up maybe not the entire amount, but a large part of the remaining value of your house over time. So you might only borrow $120,000, let's say, on a $300,000 home. But at the end of the loan, if you've been in the home a really long time, you might owe $250,000. You might owe $280,000. A lot of your equity will be consumed by the interest on the reverse mortgage that accrues. So how long can you keep the loan? You can stay in the home. You can keep the loan as long as you want. There's no time limit. You can also, in most cases, make payments on the reverse mortgage if you want to, and then reborrow that money later. As long as you live in the home, no matter how long it is, you don't have to make any payments at all, though. And it doesn't matter how much you end up owing. So if you get a reverse mortgage, borrowers, homeowners will get a monthly statement saying how big their loan balance is, how much they owe, how much interest has been added on. But it doesn't matter how much you owe. You don't have to make any payments. And if the loan doesn't foreclose, you can stay in the home as long as you continue to meet the requirements under the loan, which we'll talk about. Again, confirming that a HECM, a home equity conversion mortgage, is a federally insured loan. It's FHA insured. What does that mean? It means that the government, HUD in this case, guarantees the loan. It makes sure that even if your mortgage company goes out of business, that HUD will insure the loan. HUD will then take over the loan and make sure that you get any money that you're entitled to borrow. It'll make sure that you get your monthly statements. It will make sure that investors are paid, that taxes and insurance are paid, and HUD will do that until the loan is sold to another company, till the loan is taken over by another lender. So that kind of insurance from HUD, that FHA insurance, it protects the homeowner and the lender. It means that the lender will get paid even if the borrower owes more than the home is worth. So it could happen, let's say you have a $300,000 home, you take out a reverse mortgage, and you have the loan for a very long time. And that loan balance just gets bigger and bigger and bigger and bigger. And it could happen that when you're done with the house, when you either go to sell it or when you pass away as the borrower, you could possibly owe more than the home is worth. If that happens, neither you nor your estate or your heirs have to pay anything beyond the value of the house. Anything extra that's owed. So in my example, house is worth $300,000. If at the end of the loan you owe $310,000, the most that your heirs will have to pay is basically whatever they can sell the house for. And anything extra that's owed to the lender has to go collect their money by filing an insurance claim with HUD. Okay, so you're not strapping your estate or your heirs with any debt when you have a reverse mortgage. So who's eligible to get a reverse mortgage? Well, all the borrowers on the loan have to be at least 62 years old. And it has to be a 1 to 4 unit building. It can't be a commercial building, but it could be a 3-flat, a 2-flat, as long as the borrower lives in one of the units. So it can be kind of a rental property, but 1 to 4 units. The borrower has to live in the home at least half the year. So, if you're a snowbird and you go down to Florida, or if you go down to Tennessee, or you go to Arizona for a few months out of the year, that's perfectly fine. But the home wherever you get the reverse mortgage, that has to be your primary residence, meaning you're there more than half the year. It's where you're registered to vote, etc. I know we're talking to a bungalow group. But most condos are eligible, not all of them. And that's something that each lender has to check to make sure that the condo development itself, the building, would be eligible. The property has to be in good condition. It's allowed to need some repairs. Actually, the technical definition is the homes are allowed to need up to 15% of their value in repairs. So if you have a $200,000 home, the home could need up to $30,000 in repairs, and you can still get the reverse mortgage. Because I do talk to a lot of clients who say, the very first question I ask them is, do you have any questions for me when we start the counseling? And the second question I ask them is, okay, Now, why do you want to get a reverse mortgage? And a lot of times I'm talking to older homeowners who say, you know what, I have a lot of repairs that need to be done. I've been in my home a long time and I don't have the cash to make the repairs. And I don't have the money to be able to take out a loan and pay that interest. Or sometimes people just want to do upgrades. They want modifications. They want to put grab bars in the bathroom, for which there's other grant programs. And then we talk about that in the counseling as well. But they want a walk-in shower. They want, they have to put in a chairlift because the bedroom isn't on the main floor, it's on the second floor or something like that. So, but the property is allowed to need up to 15% of its value in repairs, and up to 15% of the value can be financed in the loan. If the home needs more than 15% of its value, then the homeowner may have to get some of those repairs done before they get the reverse mortgage. I'll give you an example. I talked to a senior the other day to schedule a counseling session. She lives in Missouri and her home is worth about $90,000 and it needs a ton of work. It needs more than the $13,500 worth of work allowed under just as she was describing it to me, allowed under this program, under this loan product. And so we talked about other programs that might be available to help her pay for some of those repairs, like the weatherization program that might be able to help get roof repair or a furnace, or some other local programs that could help her with a hot water heater to bring the cost of the repairs down below that $13,000 level. But up to 15% of the home value can be financed as part of the loan to make those repairs. The reverse mortgage is going to pay off any existing mortgages you have. So sometimes I have clients who say, I want to retire. I've been in my house for 40 years and I'm ready to retire and I still have a mortgage and I don't want to make a mortgage payment anymore, or I'm not going to have the cash flow to make a mortgage payment anymore, but they have significant equity. They can get a reverse mortgage to pay off their existing mortgage. But the home, after you get the reverse mortgage, the home has to be free and clear of any debt other than the reverse mortgage. As I said earlier, and we'll keep reiterating in this presentation, the loan requires, the requirement for a HECM is that you need to get independent counseling provided by a HUD certified counseling agency. Okay, independent, no connection to any lender, no skin in the game. They don't get a commission if you get the reverse mortgage, but it's also a safe, private place for you to ask questions to from somebody who's not biased, right? And anything that you discuss with the counselor is completely confidential. Nothing is shared with the lender. We can't, otherwise we're kicked out of the program. So the home itself has to meet HUD basic housing quality standards, health and safety standards. The basic systems have to work. Like I said, it was really hard when I talked to the client the other day in Missouri. She doesn't have hot water and she doesn't have a working furnace. She's got a couple of space heaters and since February, she's had to heat her water to be able to take a shower, to be able to bathe. So her home sounds like we need some other interventions before we even start thinking about a reverse mortgage. If repairs are needed, as I said, you may be able to finance them as part of the loan. The entity that decides whether you need repairs, believe it or not, is the appraiser who comes out, because as part of the loan application, the lender is going to send out an appraiser to determine how much your home is worth. And at the time, this FHA certified appraiser is also going to determine what kinds of repairs are needed. And they're going to typically be looking for things like roof, gutters, downspouts, windows, doors, electrical, plumbing, major systems in the building, things that affect the envelope of the property. They're not going to be looking to see if your, bathroom is painted purple or, that sort of thing. They don't care about cosmetic. They're looking at necessary repairs for the health and safety of the property. So the next question my clients ask is, well, okay, I know I qualify, I'm over 62, I live in the home more than half the year, I've got some equity, so tell me how much I can get. Well, the amount of money a homeowner can get from a reverse mortgage is based on 3 factors. First, it's based on your age, and it's the age of the youngest borrower. And the way it works is the younger you are, the less money you get. The older you are, the more money you get from a reverse mortgage. Why? Well, I like to tell people, because the mortgage company figures that if you're older when you get a reverse mortgage, you're probably not going to be in the home as long. So they're going to get their money back sooner. So they're willing to lend you more of it. If they're going to have to wait longer to get their money, then they're going to not lend you as much. That's one way to think about it. It's also based on interest rates in the market and other loan fees when you get the reverse mortgage. And right now, interest rates are high. They're the highest they've been in at least 15 years. And so that's going to lower the amount of money people would typically get from a reverse mortgage. So that's why when I talk to clients, and the first question I ask, do you have any questions for me? And the second question is, why do you want a reverse mortgage? If I've got a client who tells me, well, I just want to have a backup. I want to have money just in case. First of all, that's not usually the case. But if that really is in fact true, that they just want to have money just in case, reverse mortgage might not be the way to go, especially now, because interest rates are high. If you can hold out for a little longer, it might be cheaper to get a home equity line of credit where it's 50 or 100 bucks to get one. And then if you see you have to start using the line of credit and start paying, monthly payments, then maybe you want to transfer over to a reverse mortgage. But just to have a backup, reverse mortgage is an expensive way to go. It's also based on property value. You're going to get more money from the loan if your house is worth $300,000 than if it's worth $100,000, because the mortgage company is going to be willing to lend you more money if your home is worth more. Because if something goes wrong and if they have to foreclose, they're going to be able to sell the property to pay themselves off. So house is worth more, the value of the collateral is worth more, they're going to lend you more money. But note, it's really important. You are never going to be able to borrow the full value of your home. So if your home is worth $300,000, you're not going to be able to borrow $300,000. It's going to be something less. And that something less is going to be based on age, interest rate, and property value. So then people want to know, okay, fine. I'm eligible because I'm 62 and I live in the property the majority of the year. My home is in decent shape. Like, how do I get the money? You talked about how much I get. Well, how do I get it once I get the loan? Well, you can get the money in a few different ways. You can do a payment plan where you tell the mortgage company, hey, I want a certain amount of money every single month put in my account because I have a bill to pay every month. I have some home health care to pay, or I've got a car payment to make each month. So I want a certain amount of money put in my account every month. Okay. Do you want it? You want part of it now, like in monthly payments? Do you want it all right now? Do you want, because you have a debt to pay off, you have a car you want to pay off, you have credit cards that you want to pay off. So do you want a large chunk of it now? Do you want to just take it out when you need it? Use it as a line of credit. You know that you've got some home repairs coming up down the road. You might have some debt that you want to pay off. So you want to take it out in a line of credit, just take it out as you need it. Or living in Cook County, our tax bills, right? And taxes have gone up, and now we're about to go into a reassessment year for Chicago, right? And you might say, hey, I'm on a fixed income. I don't have enough money to put aside every month so that when my taxes are due, I can pay that first installment of my property taxes or my second installment. When those large unexpected expenses or irregular expenses come up, I want to have some cash. So you might want to take it out that way. Or do you want to have it divided up into monthly payments that will last for as long as you're in the home, no matter how long you live in the home? These are all different ways that you can take out the money. And we actually give names to those different ways that you would take out the money. There's something called a term payment. That's a way of taking out the money where you say, you know what? It's a certain amount of money that I'll get every single month for a certain period of time. You might want to do this if you retire, you're on Social Security, but you're eligible for a pension in a certain number of years, or flip-flop. You get a pension, but you want to put off getting your Social Security for a few years to be able to maximize your Social Security benefit. So you might only want that monthly benefit for a certain period of time till another benefit or an annuity, something else, kicks in. Or, and I've had people who say, look, I have a lawsuit pending, a personal injury lawsuit, and I need some bridge money until, that the funds from the lawsuit, the award from the lawsuit comes in. Okay, that would be a term payment. You're getting payments for a certain period of time in a certain monthly amount. Tenure payment, like a teacher has tenure to school, never ends. You get it for as long as you're in the home, every single month, even if you live to 120. It's a monthly advance for as long as the borrower remains in the home. It's called a tenure payment. You don't really, if it's a tenure payment, if the lender kind of averages out and does all the math to figure out how much you would get each month. Where a term, you're telling the lender how much money you want each month for a period of time. Or you could just set up as a credit line. You could say, you know what, I don't need the money now. I'm okay, but I'm going to retire in the future and I'm going to need the money when I need it. Or I'm fine now, but when that tax bill comes, my second installment of my 2023 taxes, I'm going to need money to pay for it. So I want to be able to draw it out as I need it. That's a credit line. There's also, you can combine the two. You can say, I want a line of credit plus a monthly payment. I want like $200 put in my account each month, and I want to set aside $50,000 for repairs that I'm going to need down the road. You can absolutely do it that way too. And as long as there's money that you have not yet taken out of the loan, you can always change the structure, change the method of taking out the money. You can always do that as long as there's money you have not yet taken out. Once you take out all the money, you can't change any payment structure because there's no more money to take out. Which gets me to a point. You can't think of this as a solution to retirement. You have to have a plan B. There's a finite amount of money that you're going to be able to borrow. And once that money runs out, hopefully you don't outlive your money, but if the money runs out, when it runs out, you need to have a backup plan. What are you going to do? It is going to be a little bit more difficult because if you say, well, when the money runs out and I can't stay in my home anymore, then I'll sell the home. But then you're going to have less equity. To be honest, you're going to have less equity in your home because you're going to have this large loan to pay off. So, but you want to have a plan for what's going to happen after the reverse mortgage. And that's one of the things that the counselor should try to help you with as well. But ultimately, it's a private decision. It's your decision. The counselor is not there to tell you whether you can or can't get the loan. They're not the gatekeeper. They're there to answer your questions and to provide information. So we talked about what you needed to do to be eligible for the loan. We talked about how you can get the money out. Then how much is it going to cost you? Because nothing's free. There's no such thing as a free lunch. Well, there are significant closing costs to getting the reverse mortgage. There are really three main categories, as I explain it to my clients. There's the fee the government gets, there's the fee the lender gets, and then there's the fee that everybody else gets. By law, the mortgage company has to allow you to finance all of those closing costs. It means deduct those closing costs from the loan proceeds, except two things, except the appraisal and the credit report, that they're allowed to ask for upfront. But the majority of the closing costs, the mortgage company has to allow you to finance them in, so you don't have to come to the table with a whole lot of money. There's an upfront mortgage insurance fee that goes to HUD, that goes to FHA for insurance, and that upfront fee is going to be 2% of your home value. So if your home is worth $300,000, 2% of that is $6,000. Right off the bat, there's no negotiation there. There's also the fee the lender gets for doing the loan. And it's going to usually be somewhere between $2,500 and $6,000. And that's something that you can negotiate with the lender. There is a calculation and a cap of $6,000 on the origination fee. And then there's the standard closing costs that are associated with any mortgage loan, like the fee for the counseling, the fee for the appraisal, the recording fee, the title insurance fee. And that's another set of fees that are needed to get any mortgage loan in Cook County, right? And that can also be financed as part of the loan. So the closing costs can be significant. It's not unheard of to have closing costs, $12,000, $15,000 on a loan, on a reverse mortgage, depending on the value of your home. If your home is worth more, the closing costs are going to be higher, especially because with that FHA insurance, 2% of a $500,000 home is $10,000. Okay, so the closing costs can add up, meaning that you have a balance on that reverse mortgage before you even actually take out any money to benefit yourself directly. You're going to have a balance on the loan for those financed closing costs. There's also a feature in a reverse mortgage which came around in like the last 6-7 years called a property charge set aside, or a LISA, a life expectancy set aside. And what that is there was a huge problem. There still is a problem with foreclosures on reverse mortgages, where people, get a reverse mortgage and they run out of money. They use it all up and then they don't have money to pay their taxes and insurance. And to prevent that from happening, or to kind of screen out, or prevent it from happening, to screen out people who might encounter problems in the future. It's kind of a hard thing to figure out. there is something called a life expectancy set aside, where the lender will do a financial assessment at the time you apply for the reverse mortgage. And if you have certain credit blemishes or very low income, the lender may require that a portion of the proceeds from the loan be carved out and set aside. That's why it's called a life expectancy set aside. The funds are set aside so that you don't have access to them, and the lender uses them to pay your taxes and insurance for you for the rest of the time you're in the home. Hopefully the lender will guess right. If they, they might guess a little bit short, but we're hoping that they guess right, and then they would use those funds to pay your taxes and insurance for you while you have a reverse mortgage. So after you get a reverse mortgage, what are the obligations? What do you have to do? This sounds too good to be true. I sign on the dotted line. I don't have to bring much money to the closing table. I pay for an appraisal. I pay for a credit report, and then I don't have to make any payments, and I just get this money. There must be a trick. Well, after you get the reverse mortgage, there's a few things you have to do. 4 things, actually. You've got to pay your property taxes. You've got to pay your homeowner's insurance. You've got to maintain the property in good repair. And you have to certify each year that you actually live in the property. So for taxes and insurance, most of you will probably say, oh, no worries, I pay my taxes and insurance now. It's never going to be a problem. Well, it's not a problem today, but remember, when we're talking about a reverse mortgage, we're also looking down the road. And it could be a problem. If you're a married couple now, as I tell a lot of my clients, and both of you are contributing, you have 2 Social Security checks, one of you passes away, your income goes down, you've still got those bills to pay, taxes and insurance could be a problem. So it might not be an issue today, but you've got to have a plan B. As I said, the whole thing about a reverse mortgage is a tool. It's not a solution to retirement. It's a tool. You want to maintain the property in good repair. Well, if there's a code violation, the mortgage company is going to get notice from the city that there's an issue. They're going to want you to make the repair, or else the mortgage company will come on the property and make the repair for you and charge it to you, and you'll have to pay them back in one lump sum with no repayment plan. And then every year, around the anniversary of you getting the reverse mortgage company will send you a letter or a postcard saying, do you still live in the property? And you'll have to sign it and send it back to them as proof that you live there. If they don't get back from you, they can assume that you don't live in the property, and they can call the loan due and payable. So, I talked about reverse mortgages being one option to help you age in place. There's other options as well, where no monthly payment may be required, and it might cost less than a reverse mortgage. You might get a senior property tax deferral if the reason you're looking for a reverse mortgage is to pay your property taxes. A lot of times there are nonprofit agencies, there's weatherization, but nonprofit agencies that can help you with home repairs, either providing for free or having deferred payment loans for repairs, or you might just sell the home and get the cash and downsize, move in with family members, roommate. You might be able to take on, or sometimes sale leaseback, where you sell the home to someone and they allow you to rent back. But those are really, really tricky. They can be good for some people. It could be problematic. You want to go through an attorney, though, and make sure that that contract that you can lease the property back is ironclad, right? You can't lose your house. So some people have said, well, I'm at risk of foreclosure. I'm struggling to make my payments. Is a reverse mortgage right for me? Homeowners try sometimes to say, well, I'm behind on my mortgage payments. Maybe I should just get a reverse mortgage, get the cash from the reverse mortgage to pay off my existing loan. But the reverse mortgage, to be honest, I've used it especially when I was at the AG's office and using the muscle of the office to try to get the servicers to agree to things. But it's hard because a lot of times by the time people are facing foreclosure, they've used up a lot of the equity in their home. That balance, they've refinanced a few times. That loan balance is pretty big and they don't have very much equity left in the home. So reverse mortgage won't work. And if you don't get enough money from the reverse mortgage to pay off your existing loan, the reverse mortgage, the other mortgage company that you have might not be willing to take less money to resolve the problem. They might say, hey, this home is worth $300,000. Why should I take only $60,000 or $70,000 when I could go to foreclosure, sell the home, and get paid back in full? So unless you're working with an attorney on the negotiation, it's going to be difficult to use it as an anti-foreclosure tool or foreclosure prevention tool. As I said, you know, some of the problems, the homeowner may owe more on the home than the proceeds of the reverse mortgage will provide. The mortgage lender that you have might not be willing to take a short payoff. And even if you get the reverse mortgage to dig you out of a hole to pay off your existing mortgage, you're still going to be responsible for property taxes and homeowners insurance. And do you have sufficient income to cover it? So there are, as I said, you know, you hear the good, the bad, and the ugly. You hear the commercials from all, you know, from all directions about, you know, how reverse mortgage is so great. You hear about dangers in the reverse mortgage. You might talk to your bank, and your bank says, we don't deal with that product, and they go, no, you know, we don't deal with that. There are a lot of, I think, misconceptions about what a reverse mortgage is. I think on the plus and the minus, you know, pros and cons. I think that having worked with my introduction personally to reverse mortgages was in 1998 when I sued a reverse mortgage company. The reverse mortgage company was in cahoots with a home repair company. And the home repair company would go around to seniors' homes and say, you need home repairs. It was a scam company. Seniors said, we don't have enough money to pay for it. They said, don't worry, there's a special government program. They would take the seniors to the loan closing. They would take all the money at the closing and then leave. Sometimes they would start work on the home, rip it apart, and then leave, or other times just take the money and run. There are a lot of protections that have been built into the program since those days. Like HECM counseling is required by law, that it's an independent nonprofit. It has to explain the transaction, how it's going to work, and what the alternatives are, and actually provide you loan estimates to show you what the loan would look like, what the fees are going to be, and how much money you would get. Again, from the counselor, not just from the lender. There's also this non-recourse limit, which means that if you end up owing more than the house is worth at the end, the lender has no recourse against you personally or your estate or your heirs. They can't collect any money from you guys on an individual basis. And there's also limits on a lot of the fees that can be charged. So definitely shop around. There are terms in the reverse mortgage that will be explained to you by your housing counselor, what terms can differ between lenders and how you might be able to get more money from the loan. And you want to get independent information, like from your housing counselor, and make decisions before contacting a lender. Know what you're looking for. They aren't for everybody. A local program or service may be faster and cost less. A home equity line of credit will cost less, typically, less closing costs. However, with a home equity line of credit, you typically have to make a payment each month. A reverse mortgage is an expensive way to borrow money if you don't plan to stay in the home long term. If you're only looking to stay in the home 1 or 2 years, a reverse mortgage can be incredibly expensive. You have all these closing costs, and all you're doing is staying in the home for a year or two. It can be very expensive. You want to be careful. If you do get a reverse mortgage, it may be difficult to manage large sums of money well. There's the potential for abuse by professionals or other family members who might see that you have a lot of money and they may have their hands out. What is it? The Good Hands people? That was Allstate Insurance, the Good Hands people. That's a really old commercial. Don't get roped into buying unnecessary, expensive financial products with the loan proceeds. You know, if someone says, well, you have all this money now, you can buy an annuity, you can buy long-term care insurance, you can buy this product, that product. Don't get roped in. Beware of scams. Funds will vary by product and the fees charged by the lenders. So again, you want to get independent information from your housing counselor, from your reverse mortgage counselor, who will explain all of the terms to you. Counseling, again, cannot underscore the importance. It's independent, objective, it's confidential. The counselor will tailor, a good counselor will tailor the information to your situation and explain what other options are available to you that might be less costly and might be a better fit. We're here to educate the consumer about reverse mortgage products and to inform you about programs that are available and to answer your questions. But we're not the gatekeeper. We can't say, if you want to get the reverse mortgage, even if I think sometimes my clients are a financial train wreck and it's like, this loan is only going to help you pay off your credit cards, but you're going to charge them up again. Your spending is the issue. It's not, and your expenses are the issue, not the reverse mortgage. I can't keep anybody from getting a reverse mortgage. I can show them, talk with them about their finances, but ultimately it's the homeowner's choice. The counseling process, you would get a list of counseling agencies, either from a lender, you can get it online. We'll do an intake. We'll provide printed materials explaining the product. The counseling will be either in phone or in person. I will tell you that about 85% of the counseling sessions are done on the phone and not in person. I was just doing a counseling session the other day for somebody in Montana. There's only one HUD certified counseling agency in all of Montana, and it was 4 hours from where my client lived. So we do it on the phone in a lot of cases. It usually lasts about an hour to an hour and a half. And I always encourage my clients, if there's friends or family members, trusted advisors, neighbors that they want to have involved, that's perfectly fine. And the counseling is good for 180 days. So it's not almost 6 months. So people don't have to make a decision right away to get a reverse mortgage. They can think about it a bit and they have time to shop around. In the counseling session, the counselor will review your financial picture, your income and expenses. They'll describe the product available and other resources. And as I said, we can't tell you whether to get the product or not. We can't keep you from getting a reverse mortgage. We can just provide the information. It's ultimately your decision. And if you have any questions about this at all, my contact information at CARPLS is 773-814-5789. That's my direct line. And my email address, which is probably the best way to reach me because I can kind of respond even if I'm on an online meeting or something like that or different hours of the day, is bgrauer@carpls.org. And with that, I want to thank you for your attention, and if you have any questions, I'm happy to answer them.
Thank you so much. That was so interesting. I realized how little I knew about them. So thank you. You were so thorough that you answered the questions that we do have.
Oh, wow.
Well, except
That's a really
one,
good sign.
one was how do you become, it says reserves mortgage, I think it means reverse mortgage certified. That's the one that you didn't touch on, so.
How you become a counselor?
Mm-hmm.
So it's actually a multi-step process now. It's become a little bit more. There always was a separate certification for, I will tell you a little bit of backtrack because I have been doing the counseling a long time. It was AARP that actually, and my mentors at AARP, in fact, that convinced HUD and Congress that counseling should be a requirement. It should be a requirement for any mortgage loan, I think, but definitely start with reverse mortgages. And so AARP started this, it didn't used to be a certification process. And about 25 years ago, they started a pilot and they said, if we're going to have an exam that people have to pass this exam and read all this material and learn all this stuff on their own. And then they would take an exam. And if they passed, they could be eligible for our pilot where we would pay agencies separate to do that type of counseling. And the program was so successful that Congress actually made it a requirement that anybody who wanted to be a HUD certified anybody who wanted to be a certified reverse mortgage counselor had to take an exam. And then in light of the foreclosure crisis, in light of the big foreclosure crisis and the recession, the Great Recession from 2008, I'd say to 2016, there were a bunch of new requirements put in for housing counselors, that there was a general certification exam that all HUD certified counselors, any counselor who worked at a HUD certified agency had to take. So in addition to the reverse mortgage exam that we have to take, we also have to be certified just like any other HUD counselor, certified in all 6 areas that HUD requires of us. So we actually have to take 2 exams. The difference also for HUD certified reverse mortgage counselors is our exam for the reverse mortgage piece, because the product is constantly changing, is we have to retake the exam every 3 years. And every 2 years, we have a continuing ed requirement where no other HUD certified counselors have to have that. So it's sort of a special certification that we have. You also have to be employed by a nonprofit HUD certified counseling agency. You can't just be kind of rogue and on your own. And one of the questions I got wrong on the exam, believe it or not, and I train people to take the exam, and I train housing counselors in all sorts of areas. And one of the questions I got wrong on the exam is, do you have to take a training before you can even take the exam? And the question is yes. And I got that question wrong because back in the day, 20 years ago, when I took the exam, there was no training for counselors. We just had to learn all the information on our own. So it's a fairly rigorous training program that we have to go through, and recertification where no other housing counselors do.
Okay. Yeah, that is rigorous. We got a few more that actually popped in the meantime. So let's, we have till 7 p.m. So we got 8 minutes.
Great, no problem. I can
Yeah.
answer, I can talk very fast.
Yeah, no, we're good. So is the LESA like escrow? If they overestimate, do they credit you back?
No. Okay, it's like escrow and it's not. The LISA, the life expectancy set aside. Excellent question. So first of all, when you do an escrow for taxes and insurance, you are making a payment to your reverse mortgage, to your forward mortgage company, I'll call them, to your regular mortgage company every month. And they're collecting 1/12 of what they think your payment should be. So that at the end of the year, they have enough money to pay everybody. And if they get it wrong, they collect more money from you. And if they get it, I mean, if they're too short, if they didn't collect enough money, then you have to pay in more money. And if they're over, then they refund it to you. On a reverse mortgage, you're not making any payments. So where does the mortgage company get the money? They calculate how much they think you will owe over your actuarial lifetime. So if you're 62, for instance, when you get a reverse mortgage, they will hold back 21 years of taxes and insurance of what they anticipate the taxes and insurance to be, which is basically a 20% increase from what you're paying now. That's an excellent question. If they hold back not enough money and you're short, you have to then, the obligation will then transfer over to the homeowner to start paying those taxes and insurance. If they held back too much, I mean, they're just holding it back. You haven't actually borrowed it, so you're not being charged interest on the money. They're just withholding money that you would otherwise be eligible to borrow. So there's no actual refund. It's just money that won't have to be paid back when you go pay back the reverse mortgage. We haven't had the requirement in place. We're just getting, I think, to the point. The requirement for a LISA, I think, went into effect in 2015. So we're in 2024 now, 9 years in. I think we're just getting to the point to find out whether they're holding back enough money or not. So we don't know. I've only had a couple of cases where they haven't held back enough money, but I think like 2. We're going to start to see whether it is going to be an issue, I think, in the next couple of years.
Okay. Do you know what the current rate on a 30-year fixed and a reverse mortgage is?
Ugh, nobody gets the fixed rate reverse mortgage. Everybody gets the adjustable. Nobody gets the fixed, not because of the interest rate. They don't get the fixed rate because the fixed, first of all, you get a whole lot less money. The interest rate is typically a little bit higher. And the big deal is that on a fixed rate reverse mortgage, you have to take all of the money up front, whether or not you need it. So you get less money and you're forced to borrow it in a way that is not going to be beneficial to most people. It's going to cost you more in interest. So almost every borrower, I mean, like 99.9% are getting the adjustable rate. I'd say on the adjustable rate reverse mortgage right now, the rate is ranging from like 7.3 to 7.9, somewhere in that area. And we talk about in the counseling how to shop for a rate to get it on the lower side.
Okay. I always have a question like this one. Do you have to pay taxes on the money, and does a house in trust qualify?
These are softballs, great guys, and they're all things to like.
I feel like everything's
I didn't want to get
softball
into
when you
so
find
much
out.
minutia in the general presentation, and I'm so glad you're asking these questions. One, it is not income, and I will definitely add this to the presentation. It's not income because you're borrowing money that you're going to have to pay back, so it's not income. Think of a credit card. If you charge something, you go to the store and you charge something, you got money that you have to pay back. It's not income. So nope, money from reverse mortgage is not income. And trust. Yes, if your house is in a trust, you can get a reverse mortgage. And the question is, who has to be counseled? Just the homeowner, not the contingent beneficiaries. But if you have something called a life estate, then somebody who's supposed to inherit, like after you pass away, goes directly to them, then they would have to get counseled as well. But yes, houses in trust, although I would suggest I'd look into, and I know that you've had presentations on, in fact, one not too long ago, on TOTI's, transfer on death instruments. I would look into, if all you want to set up a trust for is your house to avoid probate, look into the TOTI. It's much, since 2022, it is much more available, accessible in Illinois, available for many more properties. And it's a very cheap way, actually $59 versus what could be several $1,000s to set up a trust. If you're only setting up and this is where my legal part is coming in, because I do work for CARPLS and I am an attorney. Not there's anything wrong with being just a housing counselor, but from the legal side, recording a TOTI is $59 in Cook County. Best deal ever. Setting up a trust, if you're only doing it to transfer property and avoid probate, can be several $1,000s. So look into the toady. And yes, the property you can have a toady or a trust and still get a reverse mortgage.
This is a great time to remind people too that that was the last one that we did, was on toadies, and you can find all of these webinars. They're all recorded. So go to chicagobungalow.org. You can find them all there, scroll through them from the last few years. We started doing this during the pandemic. So check that out there. He does talk about that and the $59 and all of it. There's also a question here about bankruptcy, but you went in depth on that. So I would say, good thing to revisit as well in that. And we'll have a link in an email follow-up after this that we'll send out at some point next week or so.
I did before this evening's presentation, did check on other presentations, and I saw that Michael Stone from CARPLS had done a presentation on toadies, so I looked at it before I did this one tonight. It's a very good presentation. Take a look. It's really important. If I can give a plug for CARPLS, they're a great organization. On bankruptcy, if you file bankruptcy before you get a reverse mortgage, you're going to have to be out of bankruptcy for a little bit before you get the reverse mortgage, and that's just FHA guidelines. You can, if you do have a reverse mortgage and you file bankruptcy, you can do that, but it is going to impact the reverse mortgage a little bit. It's going to stop you from being able to draw money until you've got a bankruptcy plan set up with the judge, with the bankruptcy court judge and the trustee. And the reason for that is, if you could still take out money when you just file a bankruptcy, then the bankruptcy trustee would seize some of the money that you're taking out of the reverse mortgage and use it to pay your creditors. And you don't want that to happen anyway. So yes, it does have an impact. I'm not giving this as a legal seminar necessarily. I want to give general information, but that is some legal complications that can come up. So you'd want to check with your bankruptcy lawyer to see how it would impact the reverse mortgage once you have it, and if you are going to file bankruptcy.
Right. Since we are getting really close here, to set up counseling, should they just contact you then, Brenda? Is that?
They can. I mean, I'm speaking tonight. I mean, I'm a counselor, but I don't do the counseling through CARPLS. I would check on the HUD website, HUD.gov. And when you do a search on the HUD.gov website, I would type in HECM counseling agencies, and you click on your state. You would click on Illinois, and it'll tell you the available counseling agencies. And you want to shop around too. They charge different, some might charge up front. Some might say, hey, well, we'll get paid from closing. Some might have, the agency I work for has sort of, and it's not CARPLS, another counseling agency has a hybrid system. If you're low income, they'll charge, when you actually get the reverse mortgage, you're a little bit higher income, they would charge up front. So you want to interview the counseling agency too, before, not just in terms of what they charge. The agency I work for, I have done counseling for, only does reverse mortgage counseling, and we are the national trainers for HUD for the counseling. But don't just go who gives you ever the quickest counseling. Like, there's actually a program called Quick Cert who will give you counseling tomorrow. Sometimes they'll give you same day, which they're not supposed to do. Interview them. This is a really important decision. I know we're coming up on the hour, and Carl is like, I gotta go. It's 7 o'clock.
Yeah, and, just so Angela actually dropped a link in the Q&A section under the question as well, that the link that you mentioned, Brenda, and we'll put that in the email as well, so folks can link to that, as well as Deborah's contact info. We didn't get to every question. There's just a few left, but we can get those to you. We'll answer those as well and stick them in the email. So Brenda, thank you so much. This was so great, and we are excited to do more of these with you for sure.
Great, thank you. Looking forward to it, and have a really great evening and a good Memorial Day weekend, everybody. Thanks for coming out.
All right, thanks everybody. Good night.